So, have you also been wondering if Deepseek managed to trigger the bust of the big tech bubble that has made the fortunes of a bunch of geeky oligarchs? Today we ask Michael Roberts, a Marxist economist, editor of the blog The Next Recession, and author of several books to help us understanding the intricacies of these turmoil times. In particular, we will discuss the implications of this eventful week on the US capital accumulation, as well as its broader implications for the future of the economic competition between US and China, and for the future of mankind.
Okay, good evening, everybody. We are here tonight with Michael Roberts, an unapologetically Marxist economist, editor of the blog The Next Recession, and a prolific author on various economic topics. He is the author of some very significant books that help to make sense of contemporary economics, among which The Long Depression, published, I think, in 2016, in which he analyzes the financial crisis of 2007-2008, emphasizing its roots in the so-called real economics, and in particular in a crisis of profitability of Western capital. Then he published A World in Crisis, a collective work in which the Marxian law of the tendency of the profit rate to fall is analyzed from a theoretical and especially from an empirical standpoint. And finally, a recent publication, in 2024, Capital Through the Prism of Value, written together with the economist Guglielmo Carchedi. So, first of all, thank you very much, Mr. Roberts, to be here with us.
And, it's great to be here. I'm really pleased that you've invited me to speak. It's nice to meet you all, and I hope the YouTube viewers, or wherever they are, get something out of this.
I'm sure they will. And, well, we prepared a different plan, but then in these last couple of days, something quite significant happened. So I will start with our first question, which is just yesterday, you published a lengthy and very exhaustive article on the effects of the launch of Deepseek, effects that go beyond the immediate effects on the US stock market, which is likely to enter a phase of increased volatility, during which the pricing of the value of the asset is likely to be experiencing massive fluctuations. And as a first question, we would like to ask you, what is your personal interpretation of this event? And in particular, knowing that you have a long-lasting interest in the history of economic crisis, could you help us contextualizing it in the grand scheme of the crisis that the West is experiencing, explicitly since the financial crisis of 2007-2008, but that maybe could be dated even before, maybe from the 1970s, I guess, at least in a Marxist interpretation, I guess it would be accurate. And so is it a trigger of more serious crisis of the post-World War II accumulation cycle? Do you see any similarities with the dot-com bubble of 2000? And lastly, do you think that the liquidity that the big three have will be enough to sort of like balancing it out and not making it fall spectacularly?
Yeah. Well, I think, Carla and the rest of you, there's going to be some trigger which is going to cause a big downturn in the stock and financial markets of the world in the US. Whether that trigger in the near future, but whether that trigger is going to be the fact that the big tech companies, the so-called Magnificent Seven, the top 7 tech companies in the US, which are dominating not just the market and development of AI, but the whole industry of tech industry across the board, not only in the US, but globally, controlled by just a few moguls or oligarchs. Americans don't like the word oligarch. That's only supposed to apply to Russians. But in fact, the Americans have oligarchs just like the Russians used to have. And that these oligarchs controlling the tech industry in the US and globally dominate the stock market as well. So if they're to have any collapse in the value of their stock prices, it will take the whole of the US stock market down. And if the stock market goes down, there's a lot of people invested in that stock market, particularly insurance companies, pension funds, hedge funds, private investors, private equity, they're all going to be, it'll ricochet through into those sectors of the financial part of the economy and cause a further disruption. You can call it volatility. It's more likely to be a sharp fall. But is this particular event that we've seen with the Deepseek Chinese AI company delivering such a very cheap and very effective version of what the American companies have achieved so far, like through OpenAI and the others? This very cheap, very effective result from Deepseek undercuts the value of all these companies' production so far. Is that enough to trigger a collapse in the financial sector and through the economy? Well, I'm not so sure. I think that there's a lot of money still invested in these big companies, and these big companies, if you've seen over the last day, have their prices rallied a bit because some people are arguing that actually, if it's going to make, if we're going to have a lot more cheaper AI companies producing things that individuals can use or small companies can use, there could be a big boost in the AI applications and therefore in the sale of chips and so on. And that while the Americans still have the best chips, not the only ones, but the best, they will gain from this. We shall see on that. I think if I'm looking at what's likely to trigger a recession and a collapse financially that we haven't seen since, well, in terms of 2020 with the pandemic slump, which we could have perhaps different reasons, but the Great Recession 2008, are we going to have something like that? Then I think it depends on two factors, which I've always outlined in my books and my analysis. What's happening to profits for the big corporations, and in particular profitability, the profits relative to what they've been investing. That's key. Capitalism is a system for making things and services, producing services for a profit and for no other reason. And if they're not making profits or not sufficient profits, then they're in trouble. And the other factor is that their profits will be squeezed not only by workers asking for more wages, which is one thing, but by the fact that interest rates, the cost of borrowing for the investment and for maintaining your company is quite high at the moment. We've had a big rise in the short-term interest rates set by the central banks. As we're speaking, the Federal Reserve is about to decide whether it wants to cut rates or not, which it probably won't. And the Bank of Canada today has cut it a little bit, but rates are still very high. And as a result, that's feeding into the cost of borrowing and servicing of debt for a whole layer of companies across the board in the US and elsewhere in the world. Something like 20 to 25% of companies don't make any money at all sufficient to cover these costs of this debt serving. We call this loosely zombie companies. They're still functioning, but they're, as it were, a walking dead. And this is a huge dead weight upon the economy, not only the US, but particularly in Europe and Japan and elsewhere. So I think the danger is that unless we see interest rates come down, and if we see profitability start to fall, and it's beginning to show those signs as we go towards the end of this decade, then that's more likely to be where we shall see a trigger. And that just the aspect of AI is more a demonstration, I think, of how overvalued all these AI companies are on the stock market, because when it comes down to what they actually produce and could deliver for us in terms of improving productivity, raising incomes and conditions for people, then they've achieved absolutely nothing now. They've got a huge amount of money being invested in them. They're spending a huge amount of money. But when we look at the productivity figures across the world, we see no particular change at all in those productivity figures. I saw a couple of research, I'll finish with a couple of research papers which showed that if we think about big innovations in the history of capitalism or the industrial economy, normally they take something like 20 to 25 years before they're actually diffused, spread across sufficiently large parts of the economy to start to have an effect on changing our lives and increasing productivity. AI is at the very early stage. Whether it will get in 20 years to the point of being widely applied in the same way that you could say that internet was from the 1990s up until now, or going further back after the post-war period, the widespread use of electricity and fossil fuel automation across the world. That took 25 years to really diffuse across the world. And that applies to these things. So there's an awful lot of money going in now, which may not produce the result, and certainly hasn't done so up to now. So that remains, as it were, a big weight upon the financial sector and the key productive sectors of the US economy. At the same time as I'm arguing that profitability is not great. We know the big Magnificent Seven are making huge profits. The banks are making huge profits. Morgan Stanley made $58 billion this year in profit. It's a staggering figure. And people say, well, they're making profits. But if you look at the wider basis of the economy across the board, that's not the case for the vast majority of companies. And so if the pressure on their costs increases, that could be the sort of situation which triggers a collapse, particularly perhaps amongst the small corporate sectors, and it ricochets across. It hasn't happened up to now, but I'm not sure that AI as such or Deepseek will trigger that yet.
France.
Okay, sorry, I was switching off the microphone. Two things struck us when reading about the launch of Deepseek. The first one is that its training cost is estimated compute costs at approximately $6 million as opposed to the estimated 100 to 200 million of ChatGPT, and that was done using comparatively less efficient H800 GPU as opposed to the H100 ones used to train OpenAI. Also, I assume there would also have been different labor costs of developing the two languages. In your opinion, in which way does this news impact on the expected profits of companies such as Nvidia, which seems to have recorded the single most dramatic loss in the capitalization of a publicly traded company, amounting at a whopping $450 billion?
Well, I think it's amazing result that Deepseek has delivered to the world. This is an open source AI model. That means it's published how it works, all the ins and outs of it, and it can be used by anybody. That doesn't apply to the black boxes provided by the big American companies who proprietary hold on to how their machines learn and how they approach their training and how that develops into the coding required for inference, which is for you and me to talk to the AI model. But in the case of Deepseek, it's completely open. I've done this, as you say, with not the best chips, and they've done it with a very small amount of money compared to the big American companies. Some people say, well, it's not $6 million because they had to do a lot of research beforehand and set it all up. Maybe so. Maybe you could make it $20 million or $30 million, but it's still nowhere near the costs and the spending which the Magnificent Seven are doing in this area. It demonstrates to me that, first of all, that if people are aiming to produce a product which they think has some social need and useful need for them or for the people in general, but doesn't need to make a profit, because Deepseek doesn't need to make a profit. It's not trying to make a profit. It's producing an open source model which anybody can use. Then you can really work innovatively in keeping your costs to the minimum and also using the latest ways in which they can to make those machines learn. And they've made that machine learn by distilling it from the machine learning products already available, using the good chips, but not the best, and a highly motivated, trained workforce in China. And they've had to do it in a way because the Americans are not giving anybody any chips or giving anybody the world any of the work that they've done, and they've been able to achieve that. So it is a really disruptive result for the big American companies, that this can be done at the tenth of the cost with a basic amount of modeling and learning. It's a brilliant product, and there'll be other products like this. This is just the start. I think we're going to see now a whole range of low-cost disruptive AI models which start to produce things to enable people to use them effectively. I would add that the other side of the coin is that what these American companies will now say is, yeah, well, that's all very well, but we're not aiming to do that. We need to spend all the money because we want to do super intelligence, generalized intelligence. That is to create machine learning models which are so much more intelligent than human beings that we no longer need human beings. I mean, Altman has said our aim is to create a model which a whole corporation can be built by AIs. We don't need people at all. We certainly don't need workers. And this will be a massive profitable enterprise for companies that own this particular product. So their aim is to produce a super intelligent AI at massive cost. Two things about that. First of all, it sounds extremely dangerous that if we have models, AI models, if that was possible, that are so super intelligent they don't need humans and they make their own decisions about everything and in our lives, then that would be very dangerous for humanity. But probably more realistically, I don't think it's possible. I think they misunderstand the nature of intelligence. And that's one of the things that my colleague Guglielmo Carcadian has been particularly emphasizing in his work, that human intelligence is not the same as machine intelligence. It has a completely different dialectical power of imagining how to go forward that hasn't been thought before. All our AI machines are based on what we know, everybody knows, or the world knows, and it's been incorporated and developed, and it can bring forward very quickly and perhaps more effectively in many ways that knowledge, but it cannot create a new theory or new knowledge and hypothesize on it successfully. Einstein will not turn into an AI machine. Einstein's a human being, and that's how we really made the big progresses forward. So, but nevertheless, that's how they're going to justify this huge amount of spending that they're making over the rest of this decade and onwards. And that cost is being funded by governments. I mean, so they say, oh, the Chinese are giving loads of money to Deepseek. Well, I can tell you, it's nothing. I mean, Deepseek's just a little fund. It's not even owned by the Chinese government. If it's had any subsidies, well and good. But the huge subsidies that are going into the Magnificent Seven from the American government, and now European and governments, Italian governments, British governments are looking to buy these products from the Americans, and so we'll be subsidizing these Magnificent Seven companies to continue this process. So it's a completely different situation. The Deepseek AI is disrupting this whole process of capital accumulation in the direction of artificial intelligence.
And I mean, what I found interesting in your article is also that you mention the negative externalities of AI in terms of energy requirements. And so now these energy costs were actually valued like as a positive thing for energy producing companies, which were betting on the scaling up of AI as a guarantee for increased demand of energy consumption and therefore of the revenues, in particular companies that are investing in nuclear energy, that it looks like quite suitable to work together with the big, huge data centers. So two things seem to follow. What is DeepSeek's launch doing in terms of expected profitability of these companies? And secondly, and more relevant for us, is the fact that DeepSeek is less energy intense. I hope that, the scale up of AI won't result necessarily in an ecological crisis. And I will add also one more thing, is that it looks like the fact that DeepSeek is coming from China is not like by chance. It's like it's not just the energy sector, is like having this model of huge investments is like an insurance that the ones that have the necessary resources to reach that level, they have a monopoly position. No, so we heard always about the monopoly position of NVIDIA and what it does it mean in the provision of the foreseeable profit of the future. So it looks like Deepseek is a proof of that a market socialist system where you have the monopoly are controlled mainly by the state. You know, the state-owned enterprises are among the 130 companies we have in the Fortune 500. Like, I don't remember, 110 are state-owned enterprises, and that you work for. I mean, making the small, also big, but the private companies compete themselves. So when you have the chance to lower the costs and improving the profitability, you don't have you don't have to fight with consolidated powers that want to make profit from monopolistic positions and I mean, there is no social forces that are opposing to the fact that you are like democratizing the access to a new industrial sector or something like that.
Yes, well, on the externalities, just for the viewers, that's an economist's phrase. It simply means that under capitalism, companies produce things or make services for a profit, and they don't care what happens outside of their particular basis of investment. So obviously, fossil fuel companies get the oil out of the ground or gas out of the ground and distribute it for huge amounts of money. They don't care what the externalities are in terms of climate change, degradation of nature, and so on. These are the externalities. They're called external to the process of production, where from the point of view of socialists and for humanity in general, they shouldn't be external. They should be part of the decision making that we make on whether we invest in something and produce it, whether it's going to damage nature, whether it's going to cause increased carbon emissions and global warming. We need to take those things into account when we make investments. But capitalism doesn't do that. Capitalist companies don't do that. So that's why they call them externalities. In the case of AI, it's clear this massive spending that they're making on data centers across the US and elsewhere is going to have a considerable effect upon climate. For example, the huge electricity generation that's necessary to keep these data centers going means a massive increase in electricity production. The majority of electricity production is still fossil fuel based. Our great new American president, Donald Trump, says that, in fact, we should rely upon fossil fuels and even coal. He said, you know, coal's a good backup. Coal is good and clean coal. That's what we need to use. And then we must on drill for more oil. And this will be necessary in order to provide the electricity for these massive data centers that are being built. It's not just energy, but also water. They are sucking up huge amounts of water because I don't know if you're sitting next to your computer now, but it can get pretty warm if it's on for a long time. And if you can imagine a center with just a massive amount of GPUs hugely warming up the whole area, they need a lot of water to cool that down to keep these machines operating. So that's going to, and it is sucking up considerable amounts of water. I think something like 70% in areas where these data centers are, whatever water is available, 70% ends up being sucked up by these data centers. So that's just a basic indication of what the externalities are involved when we go in these directions. Obviously, it's not just in the AI data centers. This is happening across the world in industry in general. So that is something that's just not taken into account by the big magnificent seven. They don't care about that, and their government doesn't either. But what Deepseek does, and small and medium-sized production of the same with the same quality does, is lower the impact on these things, because it means you don't need such big data centers, if any at all. The latest position that with a reasonable amount of power, you can actually run Deepseek on your computer that you're now watching this Zoom on. if you've got a bit more power than the average laptop, but you're very close to being able to run it on a laptop. I was listening to a couple of YouTube broadcasts today by engineers saying, "Yeah, I'm running Deepseek on my laptop." He had a bit of a better one than me, but I mean that's the indication of where we're going. So we can have very local things where companies can run their own AI product. They don't need to go to NVIDIA for their chips. They don't need to go to OpenAI and Sam Altman for their model. They can do this very simply, and it won't just be DeepSeek. There'll be others that will be available over the course. So that's going to reduce the impact of externalities, reduce the cost for people, and start for it to be used in a way which actually helps people, not just to drive the megalomaniac position of having super intelligence to take over the world, which Altman and the others are aiming for.
Carlo.
Yeah, before you said, Michael, that some commentators are, I heard this Jevons paradox. So when a technology becomes cheaper, then it's going to be more widespread. Oh, yeah. And I do get it, because, you know, if ChatGPT, if DeepSeek makes AI cheaper, then probably more AI is going to be developed, and more, let's say, GPUs are going to have to be produced by somebody. I mean, probably they don't need to be NVIDIA's ones, because they're using not very good ones. So maybe other, well, supposedly not very good ones, but other producers could do that. Yeah. So I'm still unsure that that particular US tech-based monopoly will be the one that benefits from the increase of supply of these things. And surely who is going to be impacted are the AI, the so-called hyperscalers from the US, because they are, for example, ChatGPT, the Pro version. I think that the cost was planned to be $200 a month. I mean, good luck having somebody that pays for that now that it is available for free, DeepSeek. So I heard that commentator and like some tech enthusiasts from the US were sort of saying, no, it's going to play our way anyway. Just don't worry about it. The market is already bouncing up. Just carry on and just forget about this glitch. But actually, sorry, I had another question. First of all, well, if you agree with this sort of like take, and
for viewers, the Jevons paradox is that if you reduce the price of something and think about it, it will lead to an increase in demand, because you know if you're buying something, if you're buying say a car for $30,000 and it's suddenly you can produce the same car for $10,000, then maybe you'll get more buyers of the $10,000 car. That's the argument of the Jevons paradox. Obviously, it has some reason to it, but as you correctly say, that if it doesn't necessarily increase the demand if there's only a certain level of demand that people want for these things. But also, if that's the case, it just means that it still means that there is a cost-effective alternative to the expensive model, which will increase its demand, while the expensive model will take a hit. So there's a relative change in prices. So if that applies to reasonably good chips made by China, which are just a good alternative to the top chip in NVIDIA, which only goes into, if you want to put it this way, NVIDIA's putting chips in for Ferraris and Lamborghinis, and China is producing them for your standard family car, which works just fine for the rest of us. So that's the paradox of this situation. And so that these optimists who think NVIDIA is going to be fine as a result of this are perhaps reaching themselves yet, because we're only at first beginning stage of the disruption that this will make towards the Magnificent Seven and their pricing and their stock prices. Sure, they'll recover at the moment because everybody's saying, yes, but they're still going to be there, and they're still the only place to get your chip. And so the price has gone back up. I see retail investors, that's supposedly fairly well-off rich people like ourselves who like to invest in the stock market, have jumped in to buy on the dip. Well, I can tell you, as an experienced financial advisor after many years, when the retail investors go in to buy, you know that's bad news, because the market will probably go down, because the clever boys who are not retail investors, the institutions, will be keeping out. There's been a lot of move, by the way, by private equity companies to get out of this particular area. So that's an indication that optimism may for a while, but the underlying forces that you've talked about on hitting the valuations and the profits of these companies is still to be borne out.
Carlo, you had another question?
Oh, yes.
No, because you shift the question into otherwise, Francesco.
Well, it is changing the topic, but not really. But it was more about the interpreting the role of this AI competition in the cryptocurrency mining competition. So, because that's another source of, well, not really. It's I will call it like accumulation by transfer, not really accumulation by creating anything. Because, but it's still quite a big thing. So I don't know. I wanted to ask you what would be the relevance of foreign AI that can compete and potentially mine cryptocurrencies, and how this could also be a threat to certain way of capital to accumulate.
Well, I think that this is another really big risk for the financial sector and capitalism. Cryptocurrencies in general. I don't know if the viewers probably are aware, but the idea of having a cryptocurrency which apparently is out of the control of government and central banks and is completely safe for you to invest in and use. I mean, the original idea of cryptocurrencies was to replace the dollar, to replace the euro, and they would have a universal currency which was operated by individuals through their computers and through various so-called blockchain coding. But the reality is, of course, it's just turned to be just another speculative investment operation, which if you believe in it and you want to buy a Bitcoin or all the other cryptocurrencies that are available and hope that it goes up in price, then you can sell it. Why would you sell it? Because you have to convert it into a currency that you can actually buy things with, like dollars and euros. So you can make money just in the same way as you can make money by buying and selling a stock and share. But the thing about cryptocurrency, it is riddled with criminality. I mean, that's what it boils down to, with fraudsters, criminals engaged in this process of Bitcoin and cryptocurrency exchanges, which often break down and don't deliver what you've invested in. This is a very dangerous area for ordinary people to even consider investing in. And of course, it's not ordinary people that do invest in this. But what will now happen if AI can take over the investment of and the control of these exchanges, and we won't need any individuals, and there's going to be no comeback, is there? If you put your money into these cryptocurrencies and AI is deciding for you what happens to them, assuming they do it properly, because we know now that AI models are still highly unreliable in lots of areas, and this could be one of them. So I see this particular development like a lot of other things. I mean, we have Donald Trump says the government, US government, going to have a Bitcoin fund or a cryptocurrency fund, which is going to make loads of money for the government. I noticed that he's also launched his own particular bit, the Trump meme for everybody to buy, so he can make a billion out of the rest of us. But this is just wild financial speculation. If AI comes into it, it becomes even more out of control from the hands of human beings and into the hands of what? Machines deciding the ups and downs of the stock market and everything else. This can only lead eventually to some almighty mess.
France, do you have any more questions?
Yeah, I have a lot of questions, but I can make only one. I think the time is going to finish. So, in your opinion, what do you think this episode teaches us about the technological war between US and China?
Well, I think it clearly shows that the Americans have seriously underestimated the ability of China to increase its technological activity and support and superiority over all the other countries of the world. So the idea that the US was going to, first of all, not just stop Chinese trade in various other things, but also control its ability to innovate technologically has clearly not worked. In lots of areas, not just AI, we have electronic vehicle production. Electronic vehicles is China's. China's are the biggest exporters and producers of electronic vehicles. They are the biggest exporters and producers of solar energy panels and other things that go into it, and batteries. They control and have expanded the battery market like nowhere else in the world. So in very important areas of innovation and technology, China has not been stopped. It has continued to grow. And I only have to look. I was looking, I mean, the Chinese balance of trade figures now reached a point where it has a surplus of its exports of these goods and other things of $1 trillion in 2024. That's a huge amount of money. And I just saw the figures today of the deficit in the US of its trade account, which was 120 billion, a record, by the way, for 1 month. So if you multiply that by 10 or 12, so we've got China with a $1 trillion export surplus and the US with a $1 trillion export deficit or trade deficit. That's the balance. That's supposed to have been changed. That's what Trump started in 2016 to change that around. That's what Biden continued with from 2020 to now to change that around. It's not. The technological development in China has continued against all the odds because there are obviously attempts to control and break China's ability to do that. It hasn't succeeded so far. So we're in for a rough and tumble ride now, I think, under Trump to see if he can make yet further attempts to curb back China's progress. I have to say the reason for China's progress is because of the ability of the state and the government to direct resources into areas which create these technological gains, and that they have decided to come out of property and housing and investment, where they left it to developers in the past, a big mistake in my view, and to concentrate their funds not just on building roads and railways, which is staggeringly good, but also now into high quality technology in order to maintain their position in the world markets with these new technologies, particularly green technologies, and they've succeeded so far very well. We'll see whether the Americans can break this down. If they can't break this down, then I think viewers should be aware we are heading for much nastier situation where it won't just be a question of Trump threatening to do this, that, and the other with a tariff. He could be threatening something much worse than that. If by the end of this decade, 2029 is his term, they still have not managed to make any inroads into China's program.
Absolutely. I guess we completely agree, 100%. So we are satisfied, completely satisfied from this answer.
We agree, but I just say to viewers, I mean, this is going to be a difficult next 4 years under Trump in the US and elsewhere, and we're going to have some really difficult moments. The forces that oppose that, the forces of the working class and the labor movement, are still relatively weak, and there's a lot of work to be done in order to avoid some of the nasty outcomes that happened at the end of this decade. We need to do that because I would say that time is running out on us, whether it's climate change, whether it's inequalities, whether it's rivalry between major powers, which could lead to conflict. These are big issues for the next 5 years.
Absolutely, absolutely. So, Michael, it has been a very great pleasure. I hope you will be our guest again in the future. We need people like you that has been also inside the financial market and knows exactly what happens inside the brain of this like sociopathic class we have now. There is also a psychiatric point of view that we could try to analyze. So thank you very much. This is the English spin-off of Tolina TV, an Italian channel, as we say it, for the 99%. And I hope to see Michael soon. And thank you, Carlo. Thank you, Francesco. Thank you to everyone. See you soon.
Never like in these times, we need voices like Professor Roberts, because what is happening is not simply a bump in the profits of some narcissistic tech bro. It has deep implications for the society we want to live in, from the issue of property claims over technology, to how we will produce and distribute wealth, to how we will manage to live within the ecological constraints of our planet. Thanks a lot for watching. I'm Diego, and this is 99 Media. We are an independent Italian-based collective of journalists, philosophers, writers, and artists whose goal is to build a media for the 99%. If you like this content, please like, share, and subscribe to our channel. You may also want to support our work by donating via PayPal or GoFundMe at the links below. Thanks again, and I'll see you all next time.